So the battle still continues, and how long will it? We're also going to get an inside look at the pulse of the consumer. They've been lagging with confidence and sentiment, and we'll get a look inside of that this week. We're also going to talk about, is inflation still in check? PCE is on the table, so we're back around to that, and we're going to talk about the secret sauce. My name is Kevin Weedmark, aka The Mortgage Mouth, and I hope you all had a wonderful Memorial Day. Everyone was safe, and we had a great time remembering all the people who served so we get to live in this fantastic country that we do. So let's just dive in as we look at the top 3 things that are going to affect this week. And number one is the budget battle as well as tariffs. And we see constant changes on this, and I think it's going to remain here for about the next 2 or 3 months. Obviously, we have the budget battle. The Senate indicated last week that they are not going to make a decision till the later part of the summer, but we also know that negotiations are going to continue to happen. We saw people butting heads this past weekend with Rand Paul, calling out things in the budget, and then we had Speaker Mike Johnson from the House actually justifying them. So you're going to see a lot of that. And the reason I bring it up is because traders are going to take a really close look at that. The federal deficit is a major concern. Adding more debt creates Treasury issuance, increases inflation concerns, and it plays a big part in interest rates. So we want to make sure we just keep a close eye on that. And given that the Senate's not going to do anything until late summer, that is something that we're going to have to continue to deal with. And it's going to be comments throughout and possible changes that could drastically affect interest rates on a moment's notice. The other thing we have also is just the continuance of the tariffs. Are they in place? Are they not? We did see over the weekend the administration decided to pull back on when they were going to do the 50% tariff to the EU. That was going to be implemented on June 1st, which would have been next week. Now that's been pushed back till July 9th. The EU asked for it. The administration granted it. So once again, you're going to see traders pull back. They're going to say, okay, it looks like people are coming to the negotiating table, which is a good thing. And that is easing rates as we hear launch into Tuesday. The other thing we're going to be taking a close look at is just the pulse of the consumer. And the reason that it's a major concern is because the numbers have been so bleak between consumer sentiment and consumer confidence. We get both this week. And if the consumer continues to pull back, one would think that spending is going to then correlate. However, we haven't seen that. Americans love to spend money. And with the tariffs, it's something that we just really can't put our finger on. A lot of companies are front loading, companies are pulling back. When we had the 145% with China, we saw imports drop off. And now we've seen the 90-day pause. They've now more than doubled. So it's the constant back and forth. And we see the consumer reacting accordingly as well. If they perceive the prices are going to increase because of potential tariffs, they seem to be rushing out to purchase. And again, like I said, Americans continue to spend money. And why it's a concern overall is because if it really drops off, it could have then in the future affect GDP. Because remember, traders are really concerned about a recession, a long-term recession. Are we in one? Are we going to get a big one? And the consumer accounts for 2/3 of GDP, which is a massive number. So if they're really feeling shitty, they're not going to spend money. So it's a number to look for, but unfortunately, history over the past couple of years has taught us, regardless of what the consumer thinks, they are going to spend. But it's a number that I like to make sure that we take notice of, because one would think, again, that the long-term effect of the consumer pulling back means a lower GDP, which means a lower economy, which means a flight to safety into treasuries, which means better interest rates. The last thing I think we should really look at this week is inflation. Obviously, PCE is coming out. A lot of people say that it's the number one thing that the Fed looks at with regards to inflation. We have seen inflation pulling back, which has been great. Even though we were told tariffs are going to blow it out of the water, that hasn't been the case. So it's going to be a really interesting number, given it's the number one thing that the Fed looks at. Is it going to follow suit to CPI? Is PCE going to actually show the same, that inflation is pulling back? And if we do get that, that overall is going to be a good thing for interest rates as well this week. Even if it comes in at forecast, it'll be a really good sign. Again, because going back to what I said initially, a lot of traders are concerned about the budget because of an increased deficit, which could be inflationary. So therefore, if we're seeing inflation come in check with consumers, it could mean they're eventually going to feel better. They're going to continue to spend, and therefore the economy won't fall into a deep recession. As you can see, it all correlates to one another. And the last thing I just touch on is, hey, we are the secret sauce. It's oftentimes we get so concerned about, are we doing this right? How many listings do we have? All these other peripheral things, when at the end of the day, the big thing that we all need to understand, that to our clients, we are the secret sauce. Leaning into exactly who you are is why people buy from you. So, remember that we create the urgency for things to happen, for yeses to happen, and getting out of that wait and see mode. We control introducing all of our clients to great professionals, whether it be a lender right here, or it's the guy that's going to cut their lawn, or the handyman that's going to help them actually do the few things that you have indicated would be awesome to get that house on the market for the top dollar. And then your personalized touch that Zillow doesn't offer, right? Often we see right now, statistically, I want to say it's about 80% of people's searches start with Zillow. But at the end of the day, they're always typically working with a real estate agent because it's your secret sauce. So make sure that you're leaning into you, especially in times like this. You're developing your own brand that's true to exactly who you are. Don't worry about the listings. Don't worry about the closings. Don't worry about the dollar amount. Just actually be you and know that you're the sauce. All right, everyone, have a great week. You need anything, a pre-approval, talk to somebody, want to sit down and actually learn how people in my space make money and how it affects your clients' interest rates and how I can help you close more loans by the way that I position my business. Would love to do that over a cup of coffee, so please let me know. And if you're a client out there listening to this, I lend in all 50 states. Love an opportunity to learn about your situation and help you develop a plan to get to your end goal. All right, everyone, I'll be coming to you every day. Don't forget with the Daily Dose. Also, please don't forget to subscribe to the YouTube channel. It'd be greatly appreciated. Have an awesome week. Cheers.